Our next question comes from an anonymous listener. Our anonymous listener says, "Hey guys, I've worked at SpaceX for the last 5 years, where my SpaceX stock has grown close to $1 million. It comprises of 75% of my wife and I's net worth. It's grown over 50% annually since I've started working there, and the latest forecast by credible venture firms project it to grow 40% annually at least until 2030. Even the most bearish cases are showing 30% annualized returns." Now, conventional wisdom would say to diversify, but even if the bearish scenarios are showing triple of what the average stock market returns would be, why would I? For additional context, because the stock is private, it does not fluctuate by external factors like tariffs or even Trump and Elon's feud. While it isn't guaranteed, the company has consistently offered stock purchases twice a year for liquidity. As a 32-year-old with a working wife who is soon to be a stay-at-home mom, I project I could retire in 5 years with over $4 million from this one stock. And while it's risky, I think I would be able to stomach a 20% drop if that would happen, which is very improbable since it's never dropped even 2% in its 20-year history. I've been really hesitant to sell any of my stock despite people close to me telling me I need to diversify. I don't have any debt, and we don't have a mortgage. We have $170,000 in our 401ks between my wife and I, and $150,000 in emergency savings and individual brokerage accounts. What would you suggest? I even stopped contributing to a 401k and a Roth IRA 3 years ago so I could contribute more to the SpaceX stock, and it has far outpaced anything that I would have done in a Roth IRA. As someone who wants to retire by 40, does it even make sense to diversify my funds over to a tax-advantaged account that I wouldn't be able to withdraw from until I'm 59 and a half? Appreciate the help. An anonymous SpaceXer. Robert and I talked about this one before the show. We normally don't talk about stuff before the show, but we talked about this one. And I think we've got different sides of an answer here. So my answer to our anonymous SpaceXer, I feel like every person once in their life will have an opportunity to make an asymmetric bet, in the sense of, if this bet goes right, my life has changed. If this bet goes wrong, yeah, it went wrong, but I'm not in a manic state. I'm not homeless. I didn't lose everything, right? It was an asymmetric bet. The upside was way more than what the downside would have been. For our anonymous SpaceXer, I think this is your once in a lifetime asymmetric bet. I would keep the stock. I would ride the wave for another 1, 2, 3, 4, 5 years. And then once it hit $2 million, $3 million, $4 million, I would cash out 80 to 95% of it. I would diversify it across the normal ETFs and index funds we talk about, and I would retire early. That is a perfect situation. That's everything goes right. Now, what happens if it doesn't? Your $1 million could be worth $1 million. It could be worth $500,000. It could be worth, less in 2, 3, 4, 5 years from now. The opportunity cost of that could be hundreds of thousands, if not millions of dollars, considering you could have cashed all this million out right now, invest it in the markets, and it'd probably be worth $1.5 million or $2 million in 5 years. So there's definite opportunity cost that comes with this. But in my opinion, the opportunity cost of a couple $100,000 versus $3 million is asymmetric, right? And that asymmetric bet could allow our anonymous SpaceXer here to retire early and truly live a life that is, something everyone dreams of by 35, 36, 37. I made that asymmetric bet when I was younger. I invested about $15,000 into a cryptocurrency. It's now worth $300,000, $400,000, $500,000. And even if I stayed my normal 9 to 5 job or whatever, never became an entrepreneur and was making my normal 80, 90, 100, 110,000 a year, that would still be life-changing money, right? So like asymmetric bets, I feel like everyone gets one of them in their life. You take advantage of it, especially here's another reason why. You already have $300,000 invested, right? This could go to zero and you guys are still going to retire millionaires. You don't have debt. You don't have a mortgage, right? You've got all these things that are saying, no, everything can go wrong and you're still going to be fine. I would stay invested. I'd ride the wave, 2 million, 3 million, 3.5, 4, who knows? But I would have a very systematic approach to getting out of it. I would not get greedy. I would say, here's my number. I'm selling at this number. Wife, make sure you hold me accountable to sell at this number. Here's what I'm doing after, right? Have a plan. Don't just go into this with let's get greedy, make some money. Those blow up in your face. If this bet's going to work, you got to have a plan. That's what I would do.
All right. So I agree with that for the most part, but I'm going to give a slightly different approach. And it's based on one term. Bird in hand is better than two in the bush. And so in this situation, I would only change your outcome a little bit. Because of their age, I would wait until it gets to $2 million, because then $2 million at their age, assuming that happens in the next 3, 4, 5 years, that gets them to a point by the time retirement happens, they're going to have millions and millions of dollars. They're going to be able to retire early and they're going to have a wonderful life. But I would still consider not just letting this ride in perpetuity, because it is a high risk play, but they're also in a 1 in 10 million person opportunity to be working there, be getting all of these stock certificates and being able to make all of this money that way. But I still would like to see them pull some off the top. So for me, the answer is at $2 million, that gives you enough with your current money and the money you're making and the stock options to be able to retire. I would start taking profits at that point, maybe pull off 25% a year over a 4 or 5 year period, and then reevaluate after that.
Because here's the thing too, and I remember I was telling my dad about this $15,000 crypto bet that I was going to make when I was younger. And he said, do it because you have the rest of your life to make $15,000 back.
Yeah.
You know, now $1 million is way more than 15 grand. So I'm not, let's be very transparent about that. But the $1 million, it's not going to go down by 80% or something. SpaceX isn't going to go away. It's a $400 billion company. So yeah, I like your approach, right? Don't get greedy. Have a number in mind. Have a systematic exit for that number and retire your bloodline, essentially, with how much money you're going to have in 40 years, 30 years. When you are in your early 60s, you're going to have tens of millions of dollars. Now, the other thing to consider, too, nothing makes me happier than when publicly traded companies allow their employees to be invested in their own success as a company. A stat I read that I think just makes me, I'm thrilled to hear it. 78% of employees at NVIDIA are millionaires. 78% of employees at NVIDIA are millionaires because they bought the stock. They were there for 3, 5, 10, 15 years. The stock went up 10, 20, 30, 40x in value during that period of time. And now they are being rewarded for their hard work. And I think it's also about 1 in 3 NVIDIA employees have at least a $10 million net worth or higher. There's also billionaires that work at NVIDIA only because of the stock compensation they received over the last 10, 15, 25 years. And that to me is so exciting. And I love it when companies, I worked for a publicly traded company out of college, they had the exact same thing, the employee stock purchase plan. You buy it at a 15% discount or something. And if it does well over a long period of time, it's awesome. I remember sitting at a town hall once and that person was comfortable with them talking about this, but because our 401k match was matched in company stock and the stock went from 30 a share to 300 a share over that 3, 4, 5 year period of time I was working there, which had nothing to do with me, by the way. But because of that employee became a millionaire in their 401k because of, being able to have that match of the company stock. And nothing makes me happier than giving people ownership in their outcomes. And if you work hard and you have a wonderful outcome, you deserve to see the upside for it. I'm the firmest believer of that. I love the idea of giving people ownership and equity in businesses, because unless we own equity, unless we have skin in the game, then what's all this for,
Yeah, and in this situation, like I said, it's 1 in 10 million because, obviously SpaceX is an incredible company. Elon is, one of the greatest of our generation in our lifetimes in the business side of things. But we also have to look at the flip side. So if you were somebody else in this situation and you worked for Astronomer and the CEO goes out and does something crazy and it just really wrecks the image and the future of the company and the fundraising capacity, you could be adversely affected by someone else within the company or the direction of how the company is run. So just make sure you understand the difference. Not all companies are built like SpaceX, and not all companies are pretty bulletproof for long periods of time to remain profitable. So I just want to put that last little tidbit in because I think it's important.